This video we'll be going over IRS Form 8881, credit for small employer pension plan, startup costs, and auto enrollment. So this is part of the general business credit that certain employers can claim on IRS Form 3800 with their income tax return. And there are actually two credits at play here. So part one is the credit for small employer pension plan startup costs. And then part two is the small employer auto enrollment credit. There are a couple of things that we should know before we go too far into depth about calculating this credit. So first you have to be an eligible employer, and we'll get to the eligibility requirements for each credit as we go through the part. We'll also need to understand what qualified costs are, what an eligible employer plan is, and then how this credit plays out over time. So let's start with part one. Part one, the credit for small employer pension plan startup costs. This is a tax credit that's allowed under Internal Revenue Code section 45E. You can either have this apply as part of the general business credit, or you may elect to have section 45E not apply for the tax year that the credit is available by not claiming it on your tax return. So to calculate this credit, basically it's the credit is 50% of the qualified startup costs that were paid or incurred during the tax year. And this is limited to the greater of either $500 or the lesser of $250 for each employee that's eligible that is not a highly compensated employee, or $5,000 for the first tax year in each of the two following tax years. So no tax credit is allowed for any other tax year. So to be an eligible employer, you have to have 100 or fewer employees during the tax year before the first credit year who received at least $5,000 of compensation. There's a couple more criteria about employer eligibility. Specifically, you're not an eligible employer if during the first 3 tax years you established or maintain a qualified employer plan with respect to which contributions were made or benefits were accrued for basically the same employees as in the new qualified employer plan. So basically, if you already had a plan, you can't take a credit for starting up a new plan that does the same thing as the old plan. And then an eligible employer plan is a qualified employer plan with at least one non-highly compensated employee that's eligible to participate. And the first credit year is generally the tax year that includes the date that the plan became effective. So you do have the right to make the preceding tax year be the first credit year and claim the startup costs during that tax year. So with all of that understood, let's get down to this. So we're going to walk through some assumptions as we complete the top part of the form. So in line 1, we'll put in qualified startup costs incurred during the tax year. Let's just say that it costs $10,000. Now, qualified startup costs are expenses that were paid or incurred in connection with either A, establishing or administering an eligible employer plan, or B, the retirement-related education of employees about the plan. So if you're shopping through, pension plan providers, they'll charge, startup costs, administration fees. You can also bring in someone to give your employees education, and that's considered to be part of the startup costs. So in line 1, you'll enter. We'll just put in $5,000. See where this goes. Now in line 2, we'll put in half of that, and that's one part of this calculation. So in line 2, 50% of the line 1 costs. In line 3, we'll enter the number of employees that are eligible to participate in this plan. So let's just imagine that we do have 80 employees, and 80 employees times 200 or 250 per employee, that's $20,000. In line 4, we'll enter the greater of either $500 or the amount from line 3, but you cannot enter more than $5,000. So we'll enter $5,000. In line 5, we'll enter the smaller of line 2 or line 4. In this case, they both happen to be the same, $5,000. If you have a credit in line 6 that was passed through from partnerships and S corporations, so if your company owns a partnership that happens to have passed through a credit, the partnership might not be able to take the credit, but it passes the credit on to partners, and same with S corporations with their shareholders. So if you did have a tax credit that was passed down from a partnership or an S corporation or passed through, then you would enter that here. There's nothing to put into line 7. That's reserved for future use. And in line 8, you'll put in the sum of line 6 and line 5. There is no limit in line 6, basically because this is a pass-through credit from a pass-through entity. So if this is a partnership or an S corporation, this $5,000 would be reported on Schedule K. For all other shareholder or taxpayer entities, this gets reported as a general business credit on IRS Form 3800, Part 3, Line 1J. Now in Part 2, the credit is $500 for the first tax year that an eligible employer first includes automatic contribution arrangements. So the credit is $500 for each of the 2 following tax years, provided that you continue to maintain the arrangement during the tax year. This credit is not allowed outside of that 2 tax year period. Again, as an eligible employer, you have to have had no more than 1,000 or 100 employees who received at least $5,000 of compensation. The first credit year is the first tax year that you or a person treated as a single employer with you has included an eligible automatic contribution arrangement in an eligible plan. So it's pretty simple. We'll put $500 here. If there's a pass-through of an auto-enrollment credit from a partnership or an S corporation, we would enter that here. Since we don't have any, that's number is a 0. And then we'll add them. 500 plus 0 equals 500. And again, partnerships and S corporations would put this on Schedule K. All other taxpayers report this on IRS Form 3800, Part 3, Line 1J. That's all there is to this tax form. If you'd like, we've written an article that you can read in more depth. Simply go to our website, teachmepersonalfinance.com, type in IRS Form 8881 in the search bar, and you should see our article. If you like our articles, please subscribe to our newsletter. If you like our videos, please subscribe to our YouTube channel. And as always, if you have any questions, please post them in the comments section. Thank you very much. Have a great day.